there was a pretty interesting news flow from the euro area. Firstly, this Sunday there was Italian referendum, and this time opinion polls have correctly predicted the outcome of the event, and they have found out that Italians have said no to the constitutional reform proposed by the now former Prime Minister Matteo Renzi. Renzi had to resign, and although there were many negative forecasts which were associated with such outcome of the referendum, still the market's reaction was more or less limited. We saw an initial spike in euro to the downside, but quickly the currency recovers, and all in all, now the situation is more or less calm, and in the short term we don't expect this factor to have a strong impact on the European currency. One of the reasons why the market has calmed down so fast, because the situation looks far from stable in Italy and political uncertainty is expected to be ahead for this country. One of the reasons why traders don't seem very concerned with this event is the expectations that the European Central Bank will announce the extension of its quantitative easing program on Thursday, tomorrow. The European Central Bank will have its final meeting of 2016, and the majority of analysts and experts believe that Mario Draghi will announce the extension of quantitative easing QE program by about 6 months. All in all, the monetary policy of the European Central Bank represents an interesting but rather complicated question. To understand it better, I must tell you that the ECB is conducting an extremely easy monetary policy. Its balance sheet is now bigger than that of the Federal Reserve. Despite this fact, inflation in the euro area is still below the central bank's target. Inflation has accelerated in November, but it's still far from the 2% target. The European Central Bank has to make inflation reach the target level. It has to help the European economy produce good figures of economic growth. So it is buying assets in the form of this quantitative easing program. The interest rates in the region are already very low at the minimum and even negative level. So the central bank has to use these non-standard monetary policy tools to somehow help the economy and encourage inflation. But at this point in time, the quantitative easing and extension of the program is almost completely priced in by the market. And this is why we don't see any strong moves in the euro-dollar to the downside. And on the contrary, analysts are discussing the problem that the ECB should signal that its asset purchases, its quantitative easing, should eventually end. It is that there is no infinite number of the assets the ECB can purchase, and everyone realizes that an end and an eventual tapering of the QE program should come. And this tapering, the expectations of tapering are keeping the euro in demand and don't let the single currency significantly fall and make the pair of euro-dollar fall below support levels. So the market players will be watching the meeting and the press conference of the European Central Bank on Thursday. This is surely the main driver for the single currency for the next several days ahead of the Federal Reserve's meeting. In my opinion, it is likely that we will get some positive impact on the euro after this meeting, because I agree with those who think that the European Central Bank should slowly but surely start to decrease the amount of its asset purchases. All in all, Mario Draghi, the head of the European Central Bank, sounded rather positive in his recent speeches, and he even made hints that the amount of asset purchases should decline even if the European Central Bank extends QE program beyond March 2017. So this scenario is more or less positive for the single currency. Let us now look at the chart for the euro dollar, and let us, start with a weekly chart, and we may see that the euro dollar currency pair has met support in the area of 105.30 and close to 105. This is the multi-year support line which goes back at least to the minimums of 2015, and 105 is a big psychologically important level for the euro dollar. We saw that after some hesitation, there was a doji candle formed on the euro dollar weekly chart. The currency started to recover. The bulls have won this battle. The fact that the bears failed to push the pair lower, the fact that there is a strong support line here, made the pair rebound from this line. So we are currently recovering the losses in euro dollar. It is happening slowly but surely. About 24% of the market's decline since May of 2016. And the next levels to watch here are 108 and 108.40. These are resistance levels to watch. On the 4-hour chart, we can see that the 50 period moving average is moving above 100 period moving average. This is a positive sign, and a sign that after some consolidation, probably above 106.85, this is a former resistance and now support, and the next support is around 106.40. The euro dollar may test 108, 108.40, and 109 marks. These are our targets on the upside. So I think the picture for the euro should be more or less clear by now. All in all, the technical picture, the chart picture, reminds us of the inverted head and shoulders figure, although this pattern doesn't seem to be very regular. Still, as long as euro is trading above 106.50 and even 105.70, the picture for the currency looks rather positive, and we can hope for more recoveries of the single currency.